This episode is brought to you by Indeed. Stop waiting around for the perfect candidate. Instead, use Indeed sponsored jobs to find the right people with the right skills fast. It's a simple way to make sure your listing is the first candidates see. According to Indeed data, sponsored jobs have 4 times more applicants than non-sponsored jobs. So go build your dream team today with Indeed. Get a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
They always tell you there's a catch, a compromise, an asterisk. Sprite Zero Sugar? It's different. It's the lemon lime flavored refreshment you want with zero sugar. This is Sprite Zero Sugar. Obey your thirst.
Let me set the stage for today's episode. This isn't a surface level conversation. We're getting into real world insights, what works, what doesn't, and how to apply what you hear today in a practical way. Whether you're building a business, a brand, or your next opportunity. I want you to stay with me until the very end because I'm offering a free bonus specifically for listeners who finish the episode. Something that can help you skip the line and move faster if being on this show is something you've been thinking about. All right, let's get into today's conversation. Hey guys, welcome to another episode of the Financial Freedom Podcast. I'm delighted about today's guest, Travis Jamison. He's a sponsor and the founder of Capital Pad. We're going to hear about his work. Travis, welcome.
Thanks so much for having me. It's quite an honor.
I love Asheville. Talk about your journey and what you do to help clients.
Asheville's a quirky city. I grew up here and lived overseas for over a decade. Never thought I'd come back to the U.S. and somehow ended up right back. During that time, I was a serial entrepreneur. I've created a dozen companies. I was a founder. I had several liquidity events. The companies were in software, healthcare, supplements, e-commerce. After I started allocating capital to different asset classes, trying to have my capital work for me instead of me having to work for the capital, I fell into these different asset classes over time.
What are the clients that come to work with you seeking solutions to?
As an investor playing different asset classes, I found the ones I did not like and the ones I did. I like investing in boring businesses, less speculative ventures, sensible multiples, companies that have been profitable for decades are difficult to access as an individual investor. There's the lower middle market, private equity style. These are companies probably like $20, $30 million and under. And individual investors don't really get access to that. Fund or a family office writing $2 million checks. We ended up founding Capital Pad, the platform where people can invest in individual deals of companies that fit the profile I described. Definitely not mega cap private equity.
What industries, what asset classes do you target? What are some of the returns and your strategy around investing?
We target boring businesses, not technology focused, industrial. We've done rehab clinics, oil and gas servicing companies, bridge maintenance companies, things that are quite boring but stable. The beauty of the lower middle market is it's priced differently compared to most private equity. Private equity on the large end is having a tough moment. If you buy an asset, it's 10 or 15 times earnings. You really have to grow it a lot to see a good return. That worked fine when the cost of money was basically zero. It doesn't anymore. Where the assets that we're playing with, you're buying them like 3 to 6 times earnings. And so it changes the math. A company doesn't need to grow for investors to realize great returns. If it stays stable, everyone wins. It's far less speculative. We're targeting businesses that are around for decades. If you buy them cheap, it's harder to lose. As for returns, I obviously can't give specifics on anything. I speak the general asset class, a really good annual study of the Stanford Search Fund study. There's a couple of what they call independent sponsor studies from McGuire Woods and Citron Cooperman. The returns are averaging 25 to 35% IRR is basically have a look at the aggregate of the entire asset classes, which is absolutely bananas, right? That's not a normal return.
What type of investors do you attract? High income, high net worth, mom and pop? Who comes to invest with you?
Only accredited investors. It tends to be a lot of entrepreneurs, business owners, and finance people. That tends to be the target person because they understand the asset class more. Someone who's never been in a business or understood finance, they might come and it's foreign, but people are trying to diversify a lot of stocks and real estate. This is a nice third diversifier that fits into a lot of people's portfolios, as long as they're accredited and understand the asset class.
For the audience not familiar with Accredited, about the minimum income, net worth, and holding periods.
The accredited investor, if you're single, you need to be making $200,000 a year, or if you're married, $300,000 a year for the last 3 years and expect to continue doing that, or having a net worth of $1 million or more outside of your primary home. The hold times for these deals, it's private equity. The average hold time is anywhere from 3 to 7 years. 5 years is definitely the sweet spot with most of what these are targeting. Much shorter than the average private equity fund. They'll have a lot of different deals in there at the same time. It takes a long time to deploy it. These tend to be more liquid. It's easier to move in and out of them due to their size. Some of the deals pay regular cash distributions quarterly, but the vast majority do not due to lender restrictions when buying the business.
Quick pause here, because if this conversation is resonating with you, you'll want to stay until the very end. At the end of this episode, I'm giving listeners who finish priority access and the ability to skip the line if being a guest on this show is something you've been considering right now. No action needed. I'll share exactly how it works at the end of the episode. All right, let's get back to the conversation. How do you approach risk with a capital pad?
I can tell you our process. It's a two-sided platform. We call sponsors, generally former private equity individuals who went out on their own and are now doing deal by deal. They bring the deal to us. And as the platform, we curate that. We look through dozens, sometimes up to 100 different deals for every one we finally approve. That gets through our filters, goes through our interviews, and looks good to us. And we release that to the platform, to the user base. I invest in all of these. The easiest filter right there is something I want to invest in. There is risk with these deals. Any private deal can go to zero. The failure rate is far lower than venture capital. My belief is around 10% will go bust. Generally, the company wouldn't be able to meet its lender obligations. That's probably the scenario with most of these. You can have 10 go to zero, but if the others are returning 20 to 30% IRR, the math still ends up really good for individual investors. That's how I view that.
A follow-up question, you talk about investing in boring deals. How does your investment strategy change over the last whipsaw of interest rates, artificial intelligence, crazy new policies, tariffs? How does industries change with so much going on?
I think it evens out in aggregate. Some companies will be hurt from that. Some don't care. Some will benefit. That's an even out. I have a strong thesis when investing in AI. I want to invest in companies that doesn't care about AI. Because I think AI is too difficult to predict. I'm a technically savvy person and don't know what will happen or what companies will thrive or not do well. So I picked companies that don't care. If you're servicing oil and gas, it doesn't matter. Interest rates matter, but less than real estate. Real estate has its place. In my opinion, 70% of the entire real estate game is an interest rate bet because it's all based on cap rates, which fluctuate so much. If you're buying at a 4 cap rate, essentially a 25 PE multiple. If that interest rate changes, the entire deal changes. With deals buying at 3 to 6x PE, interest rate, if it goes up, will make it annoying on the debt payments, but it's not life and death. The value of the company doesn't change by near as much.
What distinguishes Capital Pad, a platform that connects accredited investors, deal by deal, sponsor-led acquisitions of established profitable businesses? What distinguishes the platform versus the old way?
There's very few ways to invest in this. If you are a family office writing $1 to $3 million checks, you can get access. The sponsors will come to them. As the individual accredited investor, writing $25,000 is the minimum for the platform, but say you're writing $25,000 to $250,000 checks. Most people can't get access. If you were really plugged into the industry, as I became, I can get access to some deals, right? You find certain ones that they'll take my 50,000, 100,000, but you're having to go to different conferences, source on forums. With all deals, how do you win? Enough deal flow to pick the good ones. If you're only seeing 5, 10 deals a year, it's hard. Through the platform, because we're aggregating everything, we're able to look at just multiples, more deals for every one that we can say yes to. When we thought this up, is I would like to plow more of my capital into deals like this. But how was the answer? It's a benefit to the sponsors bringing the deals to us. They want to raise capital and they don't want to have 100 different phone calls with random people, 100 different email threads. They're able to do it on one platform. So centralizing with technology, making it better for both sides.
Talk about success stories for clients that have come to work with you.
All of the deals we have done so far have been playing out as expected, which is really good. The fear with some of these is anyone who's ever bought or sold a business. If you sold a business, you know more than the person buying it at the end of the day. If you've bought a business, I hope I understand it. So far, that has been the case with all the business that we've had. They've all worked according to plan, which is nice. People who are accredited investors can come apply to get access. It's not guaranteed, but if approved, they can get deal flow. It's a low volume platform. It's like Angel List, how the process works. We might have one deal every 2 or 3 months because we can't predict when a good deal will come. The shortest time period we've had is 2 in 1 month. Otherwise, it's 3 months in between. Very low volume platform.
How can people connect and learn more?
Go to capitalpad.com, sign up, read about it, socials, Travis Jamison, or Google. I own an SEO company, so we do okay.
Thanks for coming on and talking about Capital Pad. I think the audience enjoyed learning about it. Thanks again.
Pleasure's all mine. Have a great one.
If you stayed until the very end, congratulations. You've earned the freebie. As promised, here it is. Email chris@drchrislewmdphd.com. You'll find it in the show notes and simply put podcast freebie. A member of our team will reach out to you about being a guest on the show. If you found value in today's conversation, please take a moment to rate the show 5 stars and follow us on Apple Podcasts and Spotify. It helps more people discover the conversations we're having here. To be a premium guest on the show, book a spot or join our podcast community. You'll find the links in the show notes below. And if you're looking for more personal guidance, you can book one-on-one coaching call with me. Our books, products, and courses are linked in the show notes. Thanks again for listening, and I'll see you in the next episode.
Carvana's so easy, just a click, and we've got ourselves a car. See?
So many cars. That's a click-tastic inventory.
And check out the financing options. Payments to fit our budget. I mean, that's...
Clickonomics 101.
Delivery to our door?
Just a hop, skip, and a click away.
And... what?
No better feeling than when everything just...
clicks.
Buy your car today on
Carvana.
Delivery fees may apply.